Hi, good afternoon. You're watching Your Stocks. I'm Samira Abdi, and with me is my colleague Nigel D'Souza. For now, we've just about come off a tad bit from the highs, but we're still holding with about 0.5% in terms of gains on the Nifty as well as the mid-cap index. The Sensex just about at that 39,000 mark and some bit of red across the banking stocks. Hi, Nigel.
Hi, Samira. Well, we're at least holding in the green as of now, but let's see where we end up this week by the time we wind down. First up, though, let's run you through all the top stories at this point of time. The Sensex and the Nifty, they trade a tad higher as Asian equities climb despite a continued tech sell-off in the US markets. Pharma frontliners lead even as financials underperform. The mid-caps do better than the large caps.
Dr. Reddy's shares continue rally on news of a settlement with Bristol Myers Squibb on sales of a drug Revlimid. This settlement allows the Indian major to sell the drug starting March 2022. In other pharma news, Perrigo's unexpected and voluntary withdrawal of its drug inhaler has opened up opportunities for incremental sales by Cipla and Lupin. Both stocks clock in strong gains.
And US-based Ha Automotive could submit a bid for Mahindra's subsidiary SsangYong Motor. Company sources in fact indicate that talks between the three companies are in advanced stages. That's a cnbc TV18 exclusive.
Tanishq's premium studded jewelry may not be flying off the shelves, but gold jewelry and even coins are seeing good demand, not just at the stores but also online. With a company-wide cost reduction plan underway, Titan expects margins to perk up as sales improve.
The government passes law to enable farmers to sell outside the APMC mandis, but Punjab farmers protest as they see it as the first step in dismantling of procurement. Its minister, Ms. Kaur, she resigns in protest. Experts say that the government needs to continue to provide farm subsidies and encourage corporate purchase of farm goods.
All right, and as we gear up now for the start of the IPL, we get you our IPL trivia contest where we ask you a question every hour and you can send in your replies to our Twitter handle. So an hour ago, the question that we asked you was, which captain lifted the diamond-studded IPL 2008 trophy? And the correct answer is Shane Warne. And here's the next question for the hour. Who was the first bowler to take a hat trick in the IPL? Get tweeting. All right, and let's talk about the primary market first. Angel Broking's IPO opens on Tuesday. Ahead of that, Dinesh Thakkar, the chairman and managing director of Angel Stock Broking, joins in now to discuss a little bit more. Hi, Mr. Thakkar. Good afternoon. Is this an IPO or an FPO? So what I mean is, will IFC get some money through this equity issue?
Yeah, it is an IPO, and so it has two components in it. 300 crores is primary and 300 crores is OFS. And IFC is diluting some small portion or maybe offering a portion in this OFS.
Okay, what's the valuation that you're looking at, and do you think it's fair considering the current environment?
We have come out with a price band of 305 to 306. Which would be like 2,200 valuation pre-money and 2,500 valuation post-money.
All right, well, retail participation is at its peak. Do you think it will fade out in a couple of months' time frame? What's the breakup in terms of retail versus institutional broking?
First of all, we are totally into retail. We do only retail broking. This company was formed to serve retail customers. So our focus is total retail. Now, let me come to growth. If you look at growth from retail, it is primarily due to digitization.
Okay, give us a sense in terms of how many active accounts you have in your book.
See, in this industry has a tendency that almost 30 to 35% customer become active of the client base. Similarly, if you look at Angel, we are in fact a bit better than industry, and our almost 35% client base is always active. When we say active customer, no, see, the broking industry is such that customer don't trade daily. So whenever he finds any kind of like opportunity or he has some spare money, that customer becomes active.
Okay. What's your take now on this SEBI margin rule and also vis-a-vis bank-backed brokerages? How do you stack up under the new margin system? I mean, is the process now more seamless for the bank-backed brokerages than, say, an individual entity like yours?
In fact, it is very simple for digital players to integrate this new system where pledging and repledging helps us to give limits to customer or give exposure to customer seamlessly. It is same like previously bank had a 3-in-1 account, and after the introduction of UPA and all digital kind of media where funds were transferred, we got an edge. So edge which was there with bank because of that 3-in-1 account, because of digitization of fund transfer, we got an edge. Now with this new rule where pledge and repledge of stocks are allowed digitally, digital player like us would be having a better edge compared to banks. When it comes to banks now, I think in technology wise, brokers, tech-savvy brokers have been far better in giving service and making journey for a customer seamless. That is where you can see also in new acquisition of client, market is consolidating towards this digital players.
Okay, can you also, share what has been the impact on your business post, the entry of, say, something like a Zerodha coming in as Angel, serves majority of just retail clients?
Digital players are always welcome when country has a youth population, and this retail customers are very comfortable using mobile app. So there is a place for 6 or 7 players. And if you look at industry is quite huge. Now, if you look at population, which is coming first time in the market and trading in equity or investing in equity, that surge is quite big. So if I say that, if I take, for example, Angel, in new client acquisition, we are acquiring 15% of market share. Now, if I calculate the whole base of industry, if this 15-20% comes to one player, and there is enough space for 3-4 players. But what we want, more digital player to create awareness and give that service. So few more players are always welcome who can expand the market. If you look at tier 3, hardly 0.5% of population is investing in equity. Now, if you look at 0.5%, that happened because of digital players. Because this 68% of population is into that area where branch office model is unviable. And only way you can approach and be profitable is through digital media. So I would say players like digital players who would come to the market, expand this market, are going to gain and help us grow financial awareness in India.
Okay, all right. We wish you the best then for this IPO. But before we let you go, what's your outlook on the market and what sort of a trend are you analyzing going ahead?
See, my outlook on market has always been bullish. I have been always bull in the market. I don't think people should be worried about a small kind of blips and gyration in economy, which are not secular. India's story is yet to play out. So if I look at market, it's just going to reflect economic trend. Minus this few quarters, which may be challenging, but I think big investors have discounted this few quarters. They are looking forward to FY22 and beyond. If you look at economic parameters, they are still confident that our growth would remain same intact. And there are huge kind of growth drivers still which can kick in. So I believe if I look at the long-term story of India, I don't say long-term means like beyond 3-4 years also. If you look at just 2-3 years also, I feel that there is immense potential. And now if you look at if numbers, few quarter numbers are bad, there's a huge liquidity which is coming into the market. So this market is not ready to go down. But when things will improve, you will see market at good heights.
Wish you all the best. This market's not ready to go down. And in fact, in today's trading session, Pharma doesn't want to go down. We thought that Dr. Reddy's was done with its run. You pull up an intraday chart of Dr. Reddy's, you'll see the way that stock is fighting. It's now up close to around 13% in a single trading session. Keep in mind, it's already rallied in the last couple of days, and today it's putting on more weight out there. One would have questioned at the beginning of today, how much is in the price? Well, it appears the market doesn't think that so much was in the price, because as we speak, we're seeing the stock just fly away and staking the market to the high point of the day as well. Well, let's slip into a short break. When you come back, we've got a lot of stocks that'll be in focus, and you've got a lot of queries as well that are coming on select stocks. We'll have our experts answer all those queries for you. Stay with us. look at it, a couple of financial stocks have moved to the low point of the day. So big boy HDFC, pull up the intraday chart. That stock has seen a bit of a downtick, and even Kotak Mahindra Bank has now moved to the low point of the day. So these financials are not participating, but the Pharma Pack is doing well. A couple of other stocks as well are chipping in, and that's why we're still holding in the green, though the Nifty Bank is down close to around 25 points or thereabouts. But we've got a lot of queries, so let's pull in our guests. We have Mayuresh Joshi, who is joining to help you out with all the fundamental advice, and Ruchi Jain as well will track the charts for you. Good afternoon, gentlemen. Thanks so much for joining in. Well, we have Vipul Shah who called us from Mumbai, and I believe he has investments in Global Spirits. Hi, Vipul.
Hi, good evening. Good afternoon.
Afternoon. How can we help you?
Okay, I have Global Spirits, 300 shares, which I bought at 208. Now, I just wanted to know the medium-term target for the stock, because it's getting locked every day in our circuit. So where do you see the targets going up to?
You're making money, Vipul. You're not sounding so happy on a Friday. You picked up the right drink, it seems. Making good money out there. Let's find out whether or not you should tank it up all the way. Mayuresh joins in. Mayuresh, tell us, what would your advice be? It's a perfect Friday stock. Maybe the brand could differ, but what would your advice be? Take the 17,000 off the table, or do you think it's likely to take you higher?
No, absolutely right, Nigel. Good afternoon. I think the stock will make highs, is making highs, and will keep you very, very high. So I think in that sense, again, the kind of revenue degrowth that the stock witnessed was comparatively lesser compared to its peers. The reason was pretty simple, Nigel. The Indian-made Indian liquor, so I think the IMIL segment, which accounts for almost 35% for its overall revenues, managed to hold on. The second element is the premiumization that they're probably doing specifically in terms of the IMFL segment. So they've done a JV with Unibev, with the earlier USL MD as well, and their three brands are being introduced. So I think the IMFL segment also expected to do reasonably better going forward. Now, input cost becomes a huge issue for liquor players. For them, I think the ENA access that they've got, the extra neutral alcohol access, and again, the kind of integration that they've done on the backward integration front, that probably helps them a bit EBITDA margin expansion as well. So I think it's a reasonable amount of debt on their books, margins expected to be strong, expectations of IML and bulk volumes, which were down because of the lockdown, expected to improve. Rajasthan is a key market, but they're diversifying geographically as well. Yeah, so you can hold on. I think levels on the downside, I think Rushit might be in a better position, but he can very well hold on to the stock, at least at this point.
Okay, hold on to the stock. It can take you higher from here. That's the advice that's coming from Mayuresh. And just a month or so ago, we are at cnbc TVT. In fact, I interviewed the management. They had said that they degrew by close to around 30% in the first quarter, but they said the industry degrew by nearly around 50%. In spite of having a 30% degrowth in the first quarter, they said that for this year they're targeting a 10 to 15 revenue percent, growth in terms of revenue percentage. So after degrowing 30%, yet they're guiding for 10 to 15% growth. Let's see whether or not it can happen. But just take a look at that stock. It's given you more than 50% returns in under a month after they delivered numbers. And Vipul is enjoying his drink as we speak. Mayuresh says, keep at it. Well, let's get to our next query. We have Pratima, who writes to us from Delhi. She holds around 2,200 shares of Granules. Oh, a lot of happy investors today. She's got in at around 120 rupees. A long-term investor wants to know whether or not to hold or to sell. Mayuresh, coming back to you. Granules, she's making good money. Well, either it is, daru or dawai. You're making money out there. Tell us.
Oh, absolutely. Davadaru is working in the markets, Nigel, no two ways about it. And Granule has given a fabulous run. So the APIs, which is, again, a part of their core molecule portfolio, whether you call paracetamol, ibuprofen, metmorphin, I think all these products are doing exceedingly well. Even on their front-end operations, if you probably look at their formulations business, that is picking up steam as well, with a lot of applications expected to come through. And 19 applications, out of which critical DMF applications are yet to be filed. So margin profile, again, I think has been extremely strong. It's being a vertically integrated operation now, right from the back end in APIs, which it supplies to others, as well as captive consumption for formulations, ensuring margins remain strong. And therefore, the bottom line growth and ROEs at 19-20% have been maintained quite consistently. The pledge issue was quite significant a few quarters back, but even that is getting off its books. But the movement has been pretty sharp. So again, I think the stock probably expected to do well because of the China plus one factor that is expected to take place. Export opportunities huge, balance sheet strength improving every passing quarter. But it's a little bit extended in our opinion from the way that the movement of the stock has been in the past few months. So you can hold on to the stock, but he should probably trail his stop losses in terms of the 50 moving day average, because that will be a prudent strategy to approach any volatility in the market.
Okay, Dawa as well doing well. You have granules that's given good returns. So both the first two callers will be quite happy. For the time being, a quick check on the markets though. Kotak Mahindra Bank continues to move lower. So keep an eye on that stock. And in fact, you have a couple of other names as well. Remember, ICICI Bank was holding with a gain of around 2%. Now that's slipping a little bit from the high point of the day. So that's a little bit, of a worry. If the Nifty bank's not going to participate, the Nifty will find it difficult. Yes, you have the other stocks that are firing and other sectors that are firing, but 30% of the index doesn't fire, then it's going to be a little bit difficult. And a couple of these other stocks that trade at quite high valuations, and they've had a big run. The FMCG names, part of the Nifty. Nestle, if you just look at the chart, you'll see what I'm talking about. There is some profit booking coming in there, and Britannia as well has moved to the low point of the day as we speak. Both those two stocks moving lower. Well, let's get in our next query. We have Naveen who writes to us from Kolkata. He wants to invest in Westlife Development at current levels. His time horizon is 1 year. Well, with the IPL, going to be starting tomorrow, we'll be keeping an eye out on pizza as well as burgers. But what's the investment strategy, Mayuresh, on Westlife? The stock has run up a considerable amount. Would you look to buy it at these levels, or will you wait for a dip?
I think I'll wait out, Nigel. I think 2-3 main reasons. Yes, IPL obviously is one of the biggest triggers for all these quick service restaurants, including Jubilant Westlife, burgers, pizzas come back in demand, and SSS growth shoots up. But what we've seen historically in the past few quarters and in the past few annualized numbers as well, as per our O'Neill methodology and what CanSlim probably suggests, that earnings have to pick up and we need to see consistency in numbers probably come through. And because of that, I think the price movement has not been that sharp compared to the broader markets. So I think wait out for one more quarter's numbers. Don't rush in. Let's see how the numbers stack up. As on date, I think our EPS strength and EPS rating seems to be quite okay on this stock. So wait out for a couple of quarters numbers before you jump into this stock.
Okay, all right. Well, wait out is the the advice that's coming in there. Mayuresh, I hope you're maintaining the diet, because otherwise wife will not be too happy as well with this IPL starting. I'm staying in good books ahead of the weekend for sure. Okay, all right. Let's move on. Then you have Amit who's writing to us as well. We have quite a few queries that are coming in there. He's holding shares of Dixon Tech, Nucleus Software, as well as Tata Elxsi. Now, he's a medium-term investor, wants to know whether or not should be holding on or selling out. Well, Dixon should be making decent amount of money. Let's pull up. Okay, we got the buy prices up for you on the screen. What's your view, Mayuresh, on any of these three stocks or on all three of them?
So phenomenal numbers. Fabulous returns to investors. So again, the strategy is pretty simple here. I think the business models individually need to be interpreted. So Dixon, Atmanirbhar Bharat, what they've got probably in terms of capacity expansion, specifically say in terms of TVs or the consumer electronic business, they're expanding capacity, new businesses flowing in very strongly. Even on the lighting business, which is a better margin business, they have expanded capacity and order books are full. So is their business related to mobile with new clients added like a Samsung, LG, washing machines, and you probably got even set-top boxes from Jio. So order book is full. Expectation of margin remaining at 5-6% is decent. ROEs are at 22-23. So you can very well hold on. Nucleus, again, the kind of impact that one probably expected for IT companies, marginalized because of digitalization, what you probably seen in terms of the product offerings, 400 odd crores product orders compared to 450 crores in the overall order book. Margins pretty strong at this point of time, expected to be in that 17-18% range. Small cap company within the IT space, but I think doing extremely well as far as numbers are concerned. Tata Elxsi, again, fabulous set of numbers. Again, the de-risking from automation, from automotives to broadband and telecommunication and healthcare. Margins between 23-25, attrition levels have come off. Valuations might be a little bit on the higher side for all of them. But hey, I think growth is coming through in numbers. So hold on. But the strategy will be very clear. I think trail your stop losses to your 50 DMA to avoid any volatility in the market.
Okay, all right, Mayuresh, appreciate you joining in and helping all our viewers out with their queries. Wishing you a good weekend. But for the time being, it seems the bears, they want to have their say before we end into the weekend. Pull up the intraday chart on the Nifty. We've seen a sharp decline out there. The Nifty Bank as well has moved to the low point of the day, and a whole host of banks are selling off. I think in just a bit we should get you the intraday chart. Yes, that's the Nifty Bank, and banks are falling and they're slipping very, very quickly. You have Axis Bank, HDFC Bank, IndusInd Bank as well as Kotak Mahindra Bank. Suddenly the markets have taken a turn for the worse, so just keep an eye out on that front. Well, we'll wrap up on this show. You stay with us. We'll have Anuj and team who will be joining in on Closing Bell to take you through all the market action. And before we wind up, don't forget to tune in at 4 p.m. today for a mega cnbc TV 18 exclusive. TC MD and CEO Mr. Rajesh Gopinath will be in conversation with Shireen Ban on Global Dialogues to discuss how COVID-19 has changed the way for the IT sector. You don't want to miss this one.